Hey everyone, welcome to Decentralized Masters Podcast, your go-to source for everything decentralized finance. I am Jon, and I am here joining you today on today's live stream. Make sure to go ahead and smash that like button. Today we're going to be going over just DeFi in general strategies as we usually do. And if you are new, go ahead and make sure to smash that subscribe button as well. Make sure to interact on the live comment section down below. We do like to go ahead and communicate. So we will be having a guest joining us in a few minutes. But in the meantime, I'm going to go ahead and start looking into some charts. So if you are joining me, feel free to ask any questions down below. So let's go ahead and get started. I'm going to go ahead and start off with a few things. One of them being the fear and greed index. That's usually what we like to go ahead and start off with. So let's go into it, and I'll go into a little bit more detail on what we're doing. So it looks like actually Filippo has joined us. So let me put him up on stage. Welcome, Filippo, man. Good to have you here, man.
Good to see you. How are you today?
I'm doing good. So everyone, Filippo is our senior DeFi analyst. A lot of you might be familiar with him. If not, really great. I've been wanting to go ahead and hop on a call with him and share during one of the live streams. So what I'm going to go ahead and do, Filippo, I'm going to go ahead and start off with a few little indicators, go over the market. And
Sure.
in the free time, if you want, you can go ahead and start pulling out some things. You can talk strategies, DeFi, meme coins that you've been talking about, altcoins. What do you think about the market? It's just going to be kind of like an open discussion. So yeah, just feel free to pretty much add on to. But overall, how are you doing today, man?
Doing great. Very busy as usual, and trying to keep up with the market here. I had a few plays today that I was also monitoring on the side, so maybe I'll show you some. But pretty much all regular stuff, helping our fellow students, push through the complicated world of DeFi. So how about you? Was it a very busy day for you as well?
So far today has been pretty good, man. One huge thing I do want to say, appreciate you for coming in last minute. I know I've been wanting you to hop on a call with us and join us on the stream, so I really do appreciate that. But yeah, it's been a pretty good day, pretty good week so far. Holiday season's around the corner, and the market overall is looking good, so that's really exciting.
Yes, of course. So let me see what I have here on my.
I'm going to go ahead and start off with a few things. I'm going to start off with fear and greed, and then you can go ahead and feel free to share your screen. All right.
Perfect. Yes, of course.
Perfect. Okay, so all right, guys. So we're gonna go ahead and take a look at the fear and greed index. As I mentioned, feel free to go ahead and comment down below if you guys have any questions for myself or Filippo. So looking at the fear and greed right now, currently we are at 73 level of greed. Yesterday we were at 76 extreme levels of greed, which is pretty interesting to go ahead and see. I do also want to mention that this week alone, we had one of the largest liquidations we've ever had since 2021. It was over like 1 point something billion. That usually happens when there's a huge level of greed coming into the market. And one of the biggest things is leverage trading. So you have to be very, very careful. Do not leverage trade if you're not too sure of what to do. But that's usually what causes this market volatility. So if you're new to crypto, this volatility is normal. But this liquidation we just had recently is not normal. It's not something that usually happens, but usually that tends to happen when there's an extreme level of greed going on in the market. And what they do is that the market makers go ahead and push down everyone out of their positions to go ahead and buy down at a lower price. So we're going to go ahead and take a look at crypto bubbles right now. Overall, the market's looking a little bit neutral today on the hourly. We see a little bit going up. We see H bar curve has been doing really good these last couple weeks. But so far right now, everything seems to be a little bit neutral. Yesterday, we did have a tendency to see the market slightly up. But looking at the daily, look at that recovery. I mean, AVAX 12%, Aave, Beam. It looks like the market is picking up. Hype at 13. So market overall is looking pretty good so far. Today is Thursday, so I'm definitely excited to see how the market's gonna end tomorrow, being a Friday. But let's go ahead and start off by taking a look at some charts real quick with Bitcoin, and then we're gonna go ahead and turn it over to Filippo, and we're gonna go ahead and move on from there. So looking at Bitcoin, we're looking at Bitcoin on the daily chart. Right now, it looks like so far Bitcoin has now established some sort of area of support. We can go ahead and confirm that probably the lowest we'll see Bitcoin anytime soon will be around the $90,000 range, but we do see a good form of support at around the 93 to 94,000. Now, one thing I do want to go ahead and point out is that it does look like we are experiencing this resistance at around the $102,000. So I would really want to go ahead and see if this is going to be able to break out. Bearish case scenario would be we see Bitcoin come all the way back down over here. We can't go ahead and break it, and then we come back down approaching below the $88,000 range, which not saying it's going to happen. Everything's possible, but I really don't think that's going to happen. I really do believe, in my opinion, that we could be seeing some sort of move where we temporarily go down and then finally do a fake out with a breakout. So that would be definitely exciting for the market overall. But Bitcoin right now so far looking neutral, nothing too crazy. Yesterday, we did see a lot of volatility into the market picking up after that liquidation that we had. But besides that, market's looking pretty decent. We go ahead and take a look at Ethereum. Ethereum is looking pretty good in my opinion. We are seeing a lot of signs of strength, at least on the daily chart. And I really do want to go ahead and see Ethereum break past this 4,903. If we could go ahead and break that area, we are more than likely going to be approaching a new all-time high for Ethereum temporarily, not all-time high from previous market cycles. From the previous market cycle back in 2021, it was around 4,800 to 5,000 Ethereum. So Ethereum right here, if you zoom out, it looks like a massive cup and handle pattern forming, something that we saw similar to Bitcoin. So if I was to go ahead and pull that out with Bitcoin, you're going to go ahead and see the similarity that we're seeing right here. So this is Bitcoin's chart. You see this massive cup and handle forming right here, which is a very bullish pattern. We see it with the breakout, the handle, and then we're also seeing now Ethereum following the footsteps. So I do believe Ethereum will be having that breakout very soon, and 6,000 is around the corner in my opinion. With that being said, Filippo, is there anything that you agree, disagree, or do you want to add on to anything that I talked about before I flip it over to you so you can go ahead and share some things with us?
Yes, so it's definitely Ethereum has been lagging. I do agree that it's just a matter of time before we see price discovery for ETH and Solana. But yeah, I do agree with everything. With the fact that I was surprised how Bitcoin held the other day compared to altcoins. So you can expect even a bloodier day if Bitcoin actually comes back down to 80K, which would be totally in the norm for a bull run. Checking out past bull runs, 20+% dips on Bitcoin were normal. So we can expect altcoins to go even lower if that happens. So if you're feeling FOMO to buy in at this point when everything is green, keep in mind that this market always gives you an opportunity to get your price entries. So these shakeouts will happen. So you have to just be ready to pull the trigger and put the limit orders where it makes sense to buy in, right? Because we want to buy in when the candles are actually red and not green, like today. Like today's over the board was pretty much a green day, but it has to be. I know it's counterintuitive, but you have to counter the market psychology and buy actually when people are selling, because just like Tyler did in the 100K challenge, he put some limit orders. They got filled, and basically he woke up that everything was already in profit automatically. So that's kind of what we want to be doing. Maybe what I can touch base with is you know, some ideas on exit strategy, if someone
Yeah,
could be
100%.
interested.
You want to go ahead and share your screen?
Sure. Let me share my
Hello,
screen.
Mila. How are you doing today? Go for it. It should be at
Yeah.
the bottom. Do you see that where it says present?
Yeah, I have to just allow it here. Give me 1 second.
Welcome, Mila. Appreciate you for being here today. Everyone, feel free to comment down below. Let me add it to the stream. So there you go. We can see your screen now.
Perfect. So basically, I'll take an example like with Ondo, for example. I like to trace lines, these lines with different colors. I put them myself. So Ondo was my average entry was 96 dollars. So cents, I mean. So basically, what I do is I pull up this ruler and I check when my position will double up. Now I did it like not very precisely, but the target where my whole position would have doubled was 188. So I went ahead and put a limit order at 188 to sell half of my initial investment of what I put in. So at a 2x, I sold half of what I put in. So let's say I put 1,000, it goes to 2,000, I'm gonna sell 500. So I'm securing those profits. Then here I timed it perfectly, almost perfectly, and then it came back down. I could have bought back in, but I decided not to. But technically I could have. And what you can do is follow this strategy, simple and effective. Like at a 2x, you sell half of your investment and you ride the rest. And then you calculate how much a 3x would be from your position. So the 3x would be this 3.85 in red. So if we actually reach this, you know, you can, which I'm expecting Ondo could technically do this in a full-blown altcoin season. You're gonna sell your other half plus some profit. So anything past this, you know, if Ondo does a 5x, for example, this would be the 5x level for me, almost $6. You can ride the profits, you know, house money, how Tan says, and it's pure profits, and you can basically act out of. You can take emotions out of the equation, and you can go ahead and ride the you know, the gains until, you know, maybe if Ondo blesses us with a 10x, I don't know, maybe it could, you know, you can ride them, and then at some point, of course, you would have to sell on the way up. So this is a simple strategy. Like at a 2x, sell half; at a 3x, sell your other half of your investment, not of the entire bag. And then from there onwards, you can do whatever you like. You can sell small portions. The more it goes up, the more you sell. Otherwise, you can simply, you know, trace Fibonacci levels and sell specific percentages. So in this case, you would trace it from the higher end to the lower end, and they would give you some levels, right? So forget about these yellow lines here that I'll delete. Wait. So let's say you don't know where the price will go. We know that traders use Fibonacci extensions, so you can expect maybe to get a resistance here at the 1618. That would be around the $2.10, and you can put a you know, a sell order here of 20% of your bag or 10% of your bag, depending on the risk appetite. Then at the second level here of the Fib extension, you may want to sell 30% of your bag, and then the higher it goes, the more you sell. So that could be another way of planning an exit strategy. And the idea here would be to think about this already when everything is green and everybody's bullish. We want to be already planning what to do next with our positions, and this is an analysis that you should apply to any position you have opened, especially with altcoins. Because I don't know you, John, I'm planning to sell most of my positions, especially altcoins, by the end of the bull run, or like, I mean, during the bull run. For Bitcoin is different, of course. For ETH is a bit different as well. you may want to just trade with half of your Bitcoin, like 50% of your Bitcoin or 50% of your ETH, and just hold those forever, the other 50%. It's up to you. But generally speaking, we've seen in the past that altcoins, the perfect example is Solana, they can lose 90 to 95% of their value in a bear market. So if you see Solana from the top to the bottom, 97% lost in value. So I'm expecting altcoins when the bear market hits to, of course, dive way deeper than Bitcoin. So just be careful, because if we sell on the way up, all the way here, you know, maybe you're gonna regret it in the short term. But then after, when the actual bear market hits, and you're patient, you will be able to buy, you know, in this kind of area, where that's where the wealth is created. If you bought, like, let's say a bunch of Solana here at $10, $20, and held it until here, already you were in massive profits. So that's the idea. Like, we can't time the market, so nobody will know where the top will be. So the only way to do it is selling at different levels, either with percentages of your bags, or just understand and take the average entries. So my purple line are always my average entries. Put it clear on a graph so that you can see it visually, and you can go from there. You can basically calculate what a 2x would be for your bag, and sell half of your investment at a 2x, and same at a 3x, you're going to sell the other half. Here I'm very bullish on Solana, so my ultimate target is around 1,000, but not financial advice, of course. Anywhere between anywhere between 400 and 600 is where I'm going to sell probably most of my bag, and I'm going to hold, hopefully, for longer here, and I'm going to sell the rest if we're blessed with $1,000 Solana, which could be possible. Of course, it's we don't know, nobody knows, but I guess time will tell. And yeah, regarding S's strategy, I hope this was kind of clear, and I highly recommend to start planning an exit strategy. But I
would definitely want to ask you a few questions with that before we move on. I mean, I think this is very important with what you're talking about. I think having some sort of exit strategy is definitely important, especially in the market that we're in. I think what I'd like to go ahead and emphasize right on is, for anybody that's already in our program. Hey, Tony, welcome as well. Appreciate you for being here. But for everyone that's already on the decentralized program, or even if you're just new to investing, one of the highest things I always recommend is always learn how to pay yourself first. So I like the fact that Filippo right here has it color coordinated with a number in mind. I think the problem that I've seen in the past, and we've probably seen this with a lot of communities, whether it's like meme coins, whether it's like the XRP maxi communities, where like they have this thing in mind where they're never selling if it doesn't hit $1,000, but they don't do the math to even see that's even realistic for a market cap to achieve. You know, it's like if you do the market, like with a lot of people saying the XRP hitting $1,000, if you actually calculate the market cap, it's not possible right now. It could be in the next 10 years plus, maybe 5. But I like the fact that you have coordinated like this. I do want to ask you, how do you find these price targets? Is there a way that you're doing it? Are you doing it like after your position doubles, you sell half of it? Do you sell 20%, 30%? What is your strategy behind this? Because I really do like the fact that you already have your exit and your take profits, which most people don't have. Like most people don't ever have this, and they're left holding the bag forever. The bear market comes, and you watch your money go from thousands of percentages, hundreds, and then watch it go all the way down because you don't have a proper exit strategy. So how do you find these percentages? And can you tell us a little bit more about that?
Of course. So I've been humbled by this market many times in the past, and I've round-tripped positions way more times than I took profits. So definitely it takes time to understand how to get out of positions. But since you're here and you're you know, getting guided by us, that we have a few market cycles behind us, I hope that you won't do the same mistakes that we've done, or I don't know if you did, John. Probably you did, because you've been
Man,
around.
we've all done these mistakes. I don't think there's one person in crypto, especially DeFi, with what we're doing, that someone
Exactly.
hasn't done mistakes, right? We've all done mistakes, and I think that's one of the beauty of the things that we have going on here. Not only for the decentralized private program that we have, also our free group, which you guys can go ahead and join down below in the description. But even in this live stream, like we've incurred losses. We've gone through the ups and downs of the market, so we have a better idea of what to expect, right? So
Definitely.
that's where, in my opinion, comes in with the values. So yeah, man, I've definitely lost myself as well. So it's not like you're the only one.
Of course, of course. So how do I do this? I kind of simplify everything, and I basically understand what my average entry for a specific project is. So my average entry for Solana this time around is 169. Once I figure that out, I come here and I just click on the horizontal line and I trace the line at the level I've basically my average entry, essentially. Then
Can you tell us a little bit about what this platform is for our new viewers that don't know what they're looking at? Can you tell them the platform you're using? Is it free? Is it paid? What is it that you're looking for?
Yes, so this platform is called tradingview.com, and it's a platform where it allows you to see all the charts. There's a free version. I was using a free version actually until like a month ago, and it was more than enough for me, at least. I just paid for the the pay version, so I can add some indicators here. I'm gonna go ahead and actually take this away. I believe Tyler created this one, and it's very good actually. So forget about these indicators at this moment. Let's try to simplify it. And to draw a line, you come here, and if you click on this little arrow, you can see the horizontal line. And if you select it, then you can basically click, and it will draw a line where you want. So that's how I kind of I like to see it visually where my average is entry. So once I picture it, I have it here in purple. I take this ruler and I calculate how much 100% would be. So a 2x for my position would be, so approximately here. And so once I figure out that 340 is where my bag is gonna double, I'm going to consider selling. Like consider selling without being too greedy, because I personally believe that 340 is just the beginning for Solana. Like it could literally go really fast past through it, but I don't care. Like I want to stick to my plan. I'm gonna sell half of what I've invested. So I've invested, let's say 1,000 here at 169. My position becomes 2,000 here. I'm gonna sell 500. So I'm gonna de-risk my position. So I still have skin in the game. I still have 1.5K, which I can ride, no problem. So once basically my position touches a 3x from here, so that would be, 300%. So around here, 689.
Hey, Duke, here. You said good to see you, Filippo. Hey, Dugas.
Dugas. Hi, Dugas. So basically, once my position 3x's, if it does, of course, there's some variance in the way. You may ask, what if a position doesn't 3x? That's why we want to take profits maybe more constantly, and it could be another way. But this is just my simplified way. At a 2x, I sell half of my investment. At a 3x, I sell my other half, plus maybe some profit. And then from then onwards, I ride with my pure gains. So it can come back down. I didn't lose anything, right? I'm riding my Solana bag basically how long I want. So if everything goes to plan, because Solana in the last bull run, I don't know if you remember, John, I'm sure you do.
Yeah.
It went from $20 to 250. So I'm expecting at least a 5x just for Solana.
Yeah, we're not that far away from hitting that. I mean, right now we're at 230. We're probably less than a 10% move from hitting 250. So I do believe, same thing with you. I do believe Solana is going to go way over $600, potentially $1,000, but I think anywhere between $600 to $800 is really realistic. And if you measure it from a percentage standpoint, it's not unrealistic. I definitely do like the approach you're taking. Scotty right here is asking, how do you make income in the down markets?
Good question, Scotty. So, I mean, there's a few ways I may answer it, and then let's see what you have to add, John. I mean, one way is definitely by shorting. We don't recommend it, right? Because it will involve some leverage. So, I mean, if you, like, only use the money that you're willing to lose, because with leverage you can go completely wrecked, how we say, like we lose everything. It's not like holding something. There's a liquidation price, so it means that if it touches that, all the money that you've betted on this position is gonna go to zero. So that's one way. And this time around, I think I don't really like shorting, but this time around, I think on a couple of altcoins, I think I'm gonna do it when the market feels overheated. And another way, I mean, it's still liquidity pools. So the idea is that we're gonna take profits and we're gonna rotate our profits back into like maybe stablecoin pools, and we are going to de-risk our portfolio. And we're still going to make some passive income, maybe at a slower rate, in stablecoin pools. So that's the two that come up to me. Maybe there's something else I'm missing. What do you think, John?
No, I agree with you 100%. And then Scotty also asked, possibly passively, how would you do that? So just basically what Filippo just touched, liquidity pools. There's a lot of opportunities in DeFi, so that's the beauty of it. You can go ahead and lend your money. You can lend USDT, you can lend USDC, you can lend your crypto, which is one of the formats you could go ahead and make money passively. Another format you could go ahead and make money passively is through liquidity pools, as Filippo mentioned. Those also, depending on what you get into, and it looks like Filippo's showing us right here, and he can give you a quick little example what that looks like. And that's what we do show in our program as well. So feel free to join our free decentralized masters group down below. Dugas says your audio sometimes cracks. Is that on my end? I apologize. Let me lower down my volume. Appreciate that. So why don't you go ahead and go for it, Filippo? I'm going to try to get this mic situation situated.
Sure.
And explain a little bit to Scotty, what is it that we're looking at, and how is one of the strategies that you would say that we could go ahead and create passive income during a bear market?
Sure. So basically, bull markets is where you make money by buying and then selling on the way up. So once we secure that money, we usually typically sell into stable coins. So stable coins such as USDC and USDT. I'm going to pull up this example. This platform is called AlphaFi, and it's built on the SUI network, so the SUI blockchain. And it has some great rewards for stable coins. So if you bridge USDC and USDT on your SUI wallet, so you're tapping in specifically the SUI DeFi ecosystem, you can come here and pool USDT. Like for example, I have $590 in here. I'm testing this pool out, and you can deposit money in here and simply enjoy this reward that is going to go up and down. Of course, it's never fixed. Yesterday this was like 60%. Usually the average that you can expect on a yearly basis on a stable coin liquidity pool or single stake strategy like this is around 20%, which is better than nothing. And it's all maths, right? Like if you put $1,000, it's gonna be 200 at the end of the year, more or less. If you put 100,000, it's gonna be 20,000. If you put 1 million, it's gonna be 200,000. So depending on the amount that you're doing this, of course, you can benefit more. And the ideal thing, of course, is never to pool all the stable coins you have in one specific LP or single stake position for smart contract vulnerabilities, of course, because you never know. Like, I mean, we follow the audits of these platforms. As long as they publish and they're, you know, secure, we usually push only good platforms. But they hacked the Pentagon, right? So if they want to hack a pool, I mean, the Pentagon is centralized, but still, like, you know, like what I'm saying. So if there's a good enough hacker that he knows what he's doing, he can definitely hack something like this. It happened in the past. You would have to be very unlucky though, because usually what happens is when somebody like hackers come in here, they're usually gonna go for the biggest pool with the highest liquidity, and by the time they're trying to drain or it's stealing the money from that pool, the platform realizes and they block everything. So you would have to be very unlucky, because they would have to choose your singular pool where your money is. But it's fair. Like, I mean, it's fair to put it out there, because it's not like, you know, there's like zero risk. Of course, there is way less risk of volatility, because you're simply in USDC, which is one-to-one backed with the dollar, and USDT as well. So in terms of volatility, when you want to park some money, these are the best places to do so. I mean, that I've found for now. But for example, there's a very time-tested platform called Harvest. So I forgot to mention, these pools, actually the percent is higher than over the board, because the rewards are paid in alpha token. Alpha token is a volatile asset. So what we can do is, when we collect our rewards, we can then go to the swapping function and sell alpha instantly for dollars, so that we can, like, you know, secure our rewards. So that's the reason why the rewards are a bit higher here. But if you go, for example, on Harvest, which has been here forever, on the base network, you can find stablecoin pools as well here. For example, there's the USDC one that pays today 16%. This usually is above 20. And there's Euro that, for example, is 20% today. So it's always wise to have positions across the board, like having some on Harvest, having some on Alpha, having some maybe on Hyperliquid, Vaults, you name it, like Trader Joe. So spreading your capital among multiple stablecoin pools will definitely give you the best of each world, and you'll basically also be mitigating some risk of not having $100,000 in one pool only. So this is usually what these pools are made for during bear markets, or during times where the markets go down and we still don't feel comfortable to buy in yet. So we can pull them here, or maybe I'm missing something. There's for sure other ways that we can make money. What do you think, John? Donna, do you want to show your screen? I'll stop sharing.
Can you hear me well, or no?
I can hear you now.
Okay. What I also want to add to that, with what you were saying, is also keep in mind, I usually recommend only keeping about 10 or 20% of what you have in your portfolio into liquidity pools, because you just never know, right? Just like any exchange, that's why we always go ahead and advocate having your money in a cold wallet, because even though these exchanges or platforms could be, you know, pretty good for now, there's always that exposure level of risk, right? So you never, as Filippo mentioned, you never want to go all in into something. You always want to go ahead and put in a little bit. So even with a liquidity pool, with stable coins, there's no volatility when it comes to that. But I wouldn't say it's 100% guaranteed no risk, right? I think you have to go in with the mindset, especially being in crypto, that because we are in a decentralized world, we are in control of our assets. We have to protect them in every way possible. So we want to go with the mentality. It might sound a little bit negative, but I think this is the best way to approach things, in my opinion, is always think of, what if it does happen, you know? So that's why, like, would you feel comfortable putting all your money in something knowing it might, you know, go wrong, might collapse, or might, you know, get hacked? you don't know. So I would always recommend same thing when it comes to like having your money on a central exchange, right? We always want to assume the best, but we also want to go ahead and keep in mind that because we are in crypto and it is decentralized, we are in control of our money. So no one's going to come back and save us if something does go the opposite way, right? Also, Mila did want to ask you, Filippo, on that. So if you could go back onto what you were sharing, she asked, is the USDC, USDT an auto pool?
So let me share my screen again here. So on AlphaFi, what was the question, Mila, again? Excuse me.
USDC, USDT auto pool, question mark.
So basically, USDC, USDT are stable coins. So when you pull them together, they won't go like there's not an auto pool per se, because there is some slight movement between them, but it won't go out of range since they always stay at $1. So technically speaking, they are a simple, like a non auto pool, like a normal pool. So you can just pull, like you can pull them together, and basically you can expect them to not go out of range unless you really put like very, very tight ranges, like 1 cent or fractions of cents different. But usually you want to put like a couple of cents of range, in a way that you can make sure to not go out of range. But technically speaking, this one is these ones are single assets strategies, so single token strategy pools. So there's no it's not an auto pool. It's like you just put one asset in there and you benefit from this reward. Did I answer your question?
Is my audio good, by the way? Can you hear me?
You have to manually manage them. So
you guys hear
basically,
me?
Yes, I can.
You hear me? Okay, perfect. It's because like I was fixing my mic audio. It looked like it was some issue. Mila asked, do you have to manage manually? So it depends. Go into it, and I'll go ahead and pull out a chart shortly right now.
Yes, basically it depends because let's say on LFJ, so the old Trader Joe, there are some stablecoin pools where you would have to pool both assets on both ends. Wait, why is this? Okay. So this one is today actually went up a lot. I've never seen it this high. So this is a kind of pool where
we can't see your screen.
Oh, sorry. Do you see my screen now?
Yep, we see. Yep, got to switch the tabs.
It's loading here. I don't know what's going on. Okay, do you see my screen?
No, not yet.
Okay, let me share again.
What platform are you trying to go to? I could probably try to do it on my end. LFJ?
LFJ, yes.
Okay, so let me go ahead and share it, and you just go over. Oh, you got it already. Here. Oops, I removed you by accident. Go ahead and click it. Go ahead and share it again.
Okay.
And then the next question, Scotty said, thanks, guys. I appreciate you, Scotty. Mila asked, how do you manage USDC, USDT pool if it goes out of range overnight? That's a great question. Felipe's going to share his screen right now with us, and he's going to go ahead and go over that.
So basically, this is the typical pool where you'll have to pool both assets. So a great way is to, put a range that will basically make sure that we don't go out of range. Typically speaking, when stablecoins pools go out of range, they usually like go out of range for a few minutes, or I've never seen a stablecoin pool go out of range for like days, let's say. So it's wise for us to just keep it this way if the range makes sense. and we can simply wait that it comes back in range. But usually, have you ever seen stablecoin pools go out of range, John? Because usually when I pool, yeah, okay. So
it depends on the
yeah,
market, right? Also depends on the market, guys. It depends on the volatility of the market, the asset that you're in. Stablecoin pools like the one that Filippo's showing us right here, the chances of it going out of range, it's not as usual as you would be doing it with the volatile assets. So with stablecoin pools, it's less of a chance of it happening. Doesn't mean it's not going to happen. It does happen, but they're stable coins, so they're not gonna fluctuate as much as if you were in a pool with an asset that fluctuates. Keep in mind, especially being in altcoin season right now, we could go ahead and see an increase of 30-40% within a couple of days or hours. So if you have a very tight range, as what he's saying, there's a possibility you could go ahead and go out of that very quickly. So there's certain ways to manage this. You could do this on a couple minutes, couple hours, couple weeks. For me personally, the way I manage my pools, I like to always go on a further range, even though with the wider range, you're not going to collect as much in fees. But with the wider range, you don't have to worry about rebalancing every minute. Or the second option would be automated pools, which I'll show after Filippo goes over this with us.
Yeah, so basically what John means is that if you don't want to go out of range and be sure, is like you're going to put 0.98 cents maybe here and 1.01, and this usually with 300 bins will be more than enough to stay in range, and if it actually goes out of range, typically will come back pretty fast. So that would be one way. Otherwise, this one is a single strategy, as I said, and it will basically automatically do it for you. So if we go to advanced view, we can see here how they take the this APY. And if you read the strategy here, it says your USDC is supplied to the Navi lending market. USDT is then borrowed against your USDC collateral, converted back to USDC. So it's basically, they also managed to get this APY from arbitrage between the two stable coins. And then the process is repeated up to 4 times to maximize APYs. The risk is minimalized by using correlated assets. So you can go ahead and we can read over this if you want. So this looping strategy increases your collateral, boosting rewards from Navi. Meanwhile, the interest earned on the supplied USDC is auto-compounded multiple times daily, accelerating the growth of your deposit. Additionally, you'll earn extra alpha rewards along the way. While the strategy minimizes risks by using correlated assets, there is a probability of temporary fluctuations in the value of deposited assets due to the volatility of the underlying assets. Specifically, the borrowed USDT is swapped for USDC, which incurs a swap fee of 0.01. If the price of USDT increases relative to USDC, this can result in a short-term and permanent loss. Additionally, when exiting the USDC boosted vault, the leverage position is unwound, requiring an additional 0.01% swap fee to convert USDC back into USDT to close the position. These costs and the potential fluctuations should be considered when using this strategy. So here you can go ahead and read
what
even
website
more.
Is this?
This is AlphaFi. So this would be on the SUI blockchain. So yeah, you can take it from here if you want to add. I'll stop sharing, John.
Yeah, go for it.
So was the question answered? Was it a bit clear? A bit less. Okay, let me stop.
I think so. I'm gonna add a little bit to that with the automated pools. So hopefully that clears some out as well. So right now I'm going to be sharing my screen with you guys. This platform called beefy.com. This is a platform where you could go ahead and enter automated pools. It's pretty simple. If you know your way around already crypto and a little bit of DeFi, this shouldn't be too much of a problem. But if you are just brand new into DeFi and this seems a little bit overwhelming, feel free to join our free community down below. We do also have a private community, so if that's something you'll be interested in, feel free to also check the links down below in the description. But pretty much go ahead and simplify things right here for you. This platform is called beefy.com. I would highly recommend all of you to go ahead and search it up as well. Save this link, go through it with me right now, or save this link and go through it at another time, just so you can kind of get an idea of what you could be expecting when you're providing liquidity in certain pools or certain times of the market, right? There's different strategies. I'm going to go ahead and just break it down very simply for you. Right here, what I'm looking at is beefy.com. And right now, I'm going to go ahead and show you the AVAX blockchain. That is a type of token, which is this one right here, as you see, Avalanche. A lot of you might be familiar with it. And when I'm looking at this, I always like to go ahead and start off by the APY, by clicking APY right here. And it's going to go ahead and break it down by the highest to lowest. So as you see right here, this is a wrap AVAX USDC. This one currently right now offering 1900%. And with a daily of 0.82%, right? So now keep in mind this fluctuation will, this percentage will fluctuate. There's a fluctuation behind this because you got to keep in mind that when you're providing liquidity, and for all those that don't know what providing liquidity is, I'll explain it in very simply terms for you. So when you're providing liquidity, basically what you're doing is that you're put it in a way where like you're putting your money in order for people to transact. So basically you put your money in a box, and let's say in order for Bob and Billy to go ahead and make a transaction, there has to be what is called liquidity, right? That liquidity is important in order for an exchange to happen between tokens. So in order for someone to sell or take profits on their tokens, like let's say, for example, AVAX, you might have some Solana, you need to provide liquidity. There has to be liquidity in there in order for that swap, for that exchange to happen. One of the best examples I like to give when it comes to providing liquidity, look at it as if you are a payment processor. You have a donut shop, or you know somebody who has a donut shop, and you have a payment processing system in their store, right? Your goal is not really too much about how much people are spending, is really about how many people are coming in and swiping their debit card, their credit card, their American Express, because you're getting a percentage off of that, right? Because you're charging the business directly for having that payment processing system. That's the way I like to describe when it comes to liquidity pools. So for that reason being, you just saw this was lower, and now it's gone up to 2,000%. This is going to fluctuate based on how much people are providing liquidity. So initially, they're going to provide you a very high, outrageous looking percentage in order to incentivize people to go ahead and come in and provide liquidity. Now, you do have to get a better idea and understanding of what it is you're doing, because you could be providing liquidity to a token that is no good or doesn't have any real value. But this one right here, this is a wrap AVAX USDC. Avalanche has been out for years. A very solid altcoin in my opinion, and it's paired with USDC. So something like this over time, you'll probably see this go up higher after the stream, or maybe even lower. And that's because the more people provide liquidity, usually the lower the reward comes in. The reason being, as I mentioned, it's a way to incentivize new users to come in. And for you taking that risk, you're getting rewarded for that. And as more people start providing liquidity, more and more people start catching on, this percentage starts to decrease. Each liquidity pool is going to be dependent also on the kind of risk you're taking. So for example, without overcomplicating it, if we were to see down right here at the bottom, we see there's this USDT USDC offering 9%. These are stablecoin pools. They're not going to fluctuate as much as a pair like an Avalanche or USDC, which is considered a volatile asset, right? So this 9%, from just sharing with you that 2,000% looks small, but keep in mind, this is also not too bad coming from the traditional financial world. You know, where else would you be getting 9%? Now, I'm not saying this is zero risk, but you could still be having your money work for you depending on the strategy you're taking. Now, if you're a little bit more on the riskier side, we could go ahead and take a look right here on the base chain. And I've been seeing a lot of these tokens. A lot of these are meme tokens. Look at this one right here, offering 6 million%, 186,000% with 2% daily. So these as well fluctuate, but these are meme coins. As you guys know, meme coins have been taking off. You could make money on them. I would say there is some pools in here that are definitely pretty good. I wouldn't recommend any because realistically, meme coins are way too volatile, and most people just can't handle the volatility. And two, I think you first want to start off with something small before you start getting into these riskier ones. But you see, there's all kinds of percentages depending on the risk tolerance that you have and what you're willing to go ahead and go into as far as managing or the risk you're willing to take when it comes to a certain asset or a certain pair of a pool. So this is the highest, as you see, these are percentages you guys could go ahead and enter. The great thing about DeFi is that you do not have to be an accredited investor. You do not have to have millions of dollars in a bank. You can literally start off with as little as $10, $20, $100 and start providing liquidity, right? And that's the reason why DeFi is very, very strong, right? Because anybody could come in here and start providing liquidity and start creating passive income just by doing this. A very similar concept of what banks would be doing by lending their money, right? So this is one of the platforms, bfeed.com. I'm not going to go too much into it. But if you guys are interested in learning more, feel free to join our free community down below in the description. But it's all based on the risk you're willing to take, right? So we do see we have a few questions right here. Hopefully that cleared up a few things, guys. I tried not to overcomplicate things. DeFi could be a little bit complicated, to be completely honest. That's why you join communities like the ones that we have, and also you join this this live stream at least on a weekly basis to kind of get familiarized with the vocabulary that we used here. So let's see what questions Scotty's asking. Yep, join our free DeFi community, become your own central bank, your own decentralized bank down below in the description. And then Scotty has a question here down for us. What's the potential you can earn in bear and bull with a low mod risk? So basically what Filippo and I just touched, it's liquidity pools with either single asset or stable coins. Those would be, in my opinion, the best option when it comes to that. So there's multiple ways when it comes to making money during a bear market. But like I said, there's also lending. There's also lending would be one of them. And then you do have the single asset pools with what Filippo just mentioned with Harvest.finance is also one of them right here. As he mentioned, you could go ahead and be earning anywhere between 13 to 30% APY, and that does change and fluctuate. But I would say that's one of the best ways with relatively very low risk. Any kind of pool that is a stable coin. Now, you do not want to throw in all your money. You always want to do 10 or 20% just in case to play it safe. But I would say something like this, where you're earning 16% on just having your stable coin. This is like you having your money in your bank account doing nothing. Earning 16%, it's not the largest number, but it's also not bad. You're earning something. And Mila said, thank you, John and Filippo, for sharing your time. I have an office hours with Shivam. See you around. We'll see you around, Mila. Appreciate you for being here.
Thank you.
Anything else you want to add, Filippo?
Yeah, basically, in a mid to low risk approach, just buying and holding Bitcoin, ETH, Solana, maybe AVAX, and some good projects, that's considered, pretty much a low risk approach. You can expect in bull markets to, of course, if you take profits, to make at least 3 to 4x, I would say conservatively, with these projects. Then, of course, in a bear market, things change. And once prices go sideways, then we can actually jump into pools that we can manage manually. So it's going to be a bit more management focused. So you will have to jump in these pools and actually change the ranges constantly. And by doing so, when assets don't go up, let's say AVAX goes sideways for years like it did in the bear market, you can take advantage of these high APYs by doing something like this, doing usually pools like John pulled up the wrapped AVAX to USDC. That's a concentrated liquidity pool, which means that it does all the job for you. Like it's gonna automatically balance. But if you are, if you have the time to manage these pools, with, for example, Solana USDC is a great other one, or maybe Sui USDC. You can bump rewards even higher by playing with tighter ranges. So usually that's what you do in bear markets, how you make money. Like you're basically providing liquidity, you're the market maker essentially, and you're making money with trading fees and not with price going up, which that's basically what happens in bull runs. The price goes up and we can make, basically buying Bitcoin at 50K, you would already be up 2x. Maybe it will go to 150, you could be up 150,000, you could be up like 3x with Bitcoin alone. And that would be pretty conservative to me, to my for my risk appetite. I'm not sure if that's if holding Bitcoin for you is risky or not, but for myself, just holding maybe the top assets and riding them for the through the bull run and taking profits out of them, that's probably the easiest way to make money. And Richard, I see there's a question. How many trades?
I don't really understand your question too much. How many trades are day on Aave? Do you mean on average? I'm assuming.
Yeah, I think on average. We don't like to really. As I said before, discussed before the exit strategy, we want to be into positions before they take off. So we were around when the bull run wasn't happening yet, right? When everything was kind of starting. So usually buying something of value and holding it for the long term will outperform any trade that you maybe want to do every day, because overly trading sometimes actually does the counter effect and you actually lose more. Because look at Bitcoin is a perfect example. If you buy Bitcoin and you hold it for 4 years, statistically you won't lose. Nobody that bought Bitcoin and held it for more than 4 years never lost $1. Instead, if you came in with no trading experience and you tried trading, let's say buying Bitcoin at the past cycle at 60K, then selling it at 63 and then buying it back like this, maybe you could have gotten hurt, because then when the bear market hit, you were expecting it to bounce back, but it actually didn't. So it really depends. Sometimes we wanna keep it kind of simple and buy when everybody is basically fearful, which is during the bear markets, and then we want to hold the assets or keep DCAing into the assets until we see these kind of runs that we're seeing right now. Like this chart is a perfect example of Stellar, which has been going sideways for years, right? Like XRP, but everybody now suddenly is interested as soon as the price moves. But you have to buy when it goes sideways. Like you had years of opportunities, and in 3 days this thing did how much, a 5x or whatever?
I think it was like over a 5x. Yeah, like about a 6x. And it's actually funny because the thing is too, like I told a lot of the members in our community about XLM. And I was talking about XLM right here at the bottom. I was saying, hey guys, if you guys are planning on buying any tokens right now during the red, not financial advice, start loading up now, because when it takes off, you won't be able to catch it. And guess what? That's exactly what happened. The reason being, I'm no wizard. It's not like I knew XLM was going to do that. I mean, I had an idea that it was going to do this, but not as quickly as I thought it was going to happen. And the thing is that, and I'll also share a chart with Sui, which a lot of our mentors were talking about, specifically Tyler and Preston were calling Sui when it was like at 40-50 cents. And looking at Stellar right here, I was calling it not that long ago, back right here around July. I was calling and I was talking about loading up on XLM. And the reason why I'm sharing you this chart now is just like Filippo just mentioned, is that most people end up buying when they're already pumping. And what you want to be doing is you want to be buying when no one cares about a token, right? not when everybody's already talking about it. And what causes pump was XRP. So if you're not too sure what XRP is or Stellar is, I'm sure a lot of you know what XRP is. The reason why Stellar is part of this XLM is because XLM and XRP are both cross-border payments, and that's one of the main reasons why XLM took off. But with that being said, as you look at this chart right here from back of 2020, usually patterns repeat themselves. So this is kind of the reason why I knew this was going to happen. As soon as it broke that resistance, guess what happened with XLM? It took off over a 5x. You know, if you go ahead and measure really the time from November, November was really when it started taking off, November 1st, and it went ahead and slightly topped off in December. So did pretty well, right? But the thing is, what I'm trying to show you here is that a lot of these tokens will do this when you least expect it. So the best way to look for these tokens is to start looking for patterns that you might identify or understand. Now, if you're not too familiar with a platform like TradingView, or you're not too familiar with how to look for tokens like this, I would highly, highly encourage all of you to join our free community down below, become your own bank. Where you can go ahead and learn these kind of strategies, even with our private group where a lot of mentors, senior analysts are talking about these gems. And I'm going to go ahead and show you a gem right now for all of you. So if you do have a Coinbase account, I'll go ahead and leave you a gem that I do believe this is going to be doing very well very soon. Something very similar to XLM. And the token that I'll be talking about today is Sushi. And then I'm going to turn it over to Filippo so he can go ahead and give us some hidden gems. But Sushi has been brought to my attention. The reason why is because Sushi is a decentralized token. What is a decentralized token? A DEX token is a DEX is pretty much a Coinbase, but is decentralized. It's where you provide liquidity, is where you do swaps. Basically, like what we just showed you right now with AlphaFi or Beefy. That would be very similar to a DEX token, right? Looking at Sushi right here, I've been eyeing Sushi since back over here, back a few days ago, back in around also November, and I mentioned this to a lot of the students too during office hours or a lot of talks to consider loading up on Sushi because it looks like there's going to be a breakout coming in. Now, guess what happened? The breakout happened. It pumped from this bottom right here to this top, did already slightly over a 3 to 4x not that long ago. From right here from this local bottom, if you go ahead and look at it to where it's currently at, already has done a 4x. Now with Sushi, now that we have breaking out of this resistance from what it looks like, I think we're going to be doing some sort of move like this, and we will be probably approaching towards the 8 to possibly the $12 range. Keep in mind, Sushi last cycle hit about $22. Can it do that? 100%. Will it do that? I'm not too sure. I think even if Sushi does half of that, it's still going to be pretty good. If you buy in at $2, you know, you could potentially sell, let's say, call it the worst case scenario, $13, which is still not too bad. You know, you're not going to make these kind of returns in the stock market within 12 months. This market moves very quick, just like we saw right now with XLM. Moves very fast. So Sushi, non-financial advice, is a token I'd recommend all of you to check out. You guys could check it out at Coinbase if you guys have a platform already created, an exchange. And I want to go ahead and show you Sui, the token and the platform that Filippo was just talking about right now. You're going to see how quick these tokens move. This is Sui right here. Back right here at around August, you see it was around 48 cents. And it has pumped literally from the bottom to this top from his all-time high already in 9x. Think about that. You put in $1,000, you now made $9,000 right here. So there's a lot of opportunities in crypto, and you know, will I be chasing tokens like this? For me personally, I don't like chasing tokens. I like looking for tokens that have the next opportunity. For me, in my opinion, is going to be Aero, AERO, which is also another DEX token. Keep a reminder, is not financial advice. This is just my opinion on these tokens. Sushi is also another one. Now, tokens like this, XRP, XLM, if you weren't holding on to them, I wouldn't chase them. That's just me. To me, just too high risk, high reward. Can it go high? Sorry, high risk, low reward. Can it go up higher? 100%. Sui's one of them. I know. I know a lot of people were waiting for this to retrace, myself included. and it didn't really do much. It just kept on going up. And will I chase Sui now? No,
No.
it is what it is. I missed it. I'll look for the next Sui. Will Sui potentially go to over $10, $20 plus? 100%. But I think in this space, you want to keep in mind that there's a lot of opportunities always available. So also a token that a lot of the mentors were talking way before when this token was back right here since last year of 2023. So highly recommend you guys check out our free community down below. I'm going to go ahead and turn it over to Filippo and see what his hidden gems are. As I mentioned, guys, Aero, AERO, Sushi Swap, which you can find on Coinbase. Let me go ahead and show you what Aero looks like. Aero as well. I'd highly recommend you guys to do your research, and you'll get an understanding as to why I'm a big believer in this. To go ahead and break it down very simply, I'll go ahead and show you a token that is in the same sector that has done very well last cycle, Uniswap. A lot of you might have heard of it. Last cycle hit $40. This is also a decentralized token. It's a DEX. Is where people provide liquidity, where people trade, where people could do swaps. And keep in mind, what is the hot trending topic this cycle? Meme coins. So even though you might not want to buy meme coins, being exposed to Sushi, Aero, Uniswap is a really good way to be exposed to that volatility without having to be in that kind of volatile, risky market, if you would say. I want to show you this right here, and I'm going to flip it over to Filippo. This platform is called Market Cap Of. I would highly recommend all of you to play around with this. I'm right now comparing Sushi to the price of Uniswap. And Sushi, if it does something similar to Sushi Swap or where Uniswap is currently at right now, that would take us to a 25x, taking Sushi to $55. Now, I don't think that's going to happen. It could happen. But this is the potential that crypto has, right? These kind of returns seem insane, but they're very possible. I just showed you a few tokens that have done over a 4 to 5x within the last couple weeks to days. With that being said, I'm going to go ahead and flip it over to Filippo, and then let's see what his gems are for the day. Go for it, man.
Sure. So to keep on the conversation, there's this website called dune.com where we can actually get some nice information about regarding these tokens that Jon was talking about that are DEXs essentially. So as we can see from this pie chart, Uniswap alone pushes 50% of the trading that happens on decentralized exchanges. So definitely the leader, since it was the first one to ever be created. Sushi Swap is pushing 327 million, which seems a lot, but compared to other ones like Aerodrome, for example, is third at 8 billion, right? So if we a great metric maybe would be to see if Sushi Swap starts picking up in volume. That could be a signal, but usually, as Jon said, we want to keep our eyes before the actual token takes off. So buying it now, there's less risk and more reward, because if then the volume goes up, the price probably will go up along with the volume and so on. So clearly there's a pattern here. So I highly recommend Dune.com if you want to see some good statistics about pretty much anything related to crypto. This one is, for example, is called DEX Metrics that I pulled up here. But my gems, I guess, you took me a bit off guard, but in regards of your discussion you were making, you want to follow patterns or charts that are not like Sui, right? We don't want to chase, we want to respect the pumps. So for me, as an AI play, of course, non-financial advice, Ori chain is definitely something that I'm invested in. And because basically it's very low, and in the past bull cycle it went as far as $100 more or less. Right now we're currently sitting at $11. So as you can see here, the chart pattern is basically bouncing off all these past resistances. So if we manage to clear these levels, I expect ORAI to perform really well because we have been accumulating, I mean, in this accumulating bear zone for years now, all the way back to 2021. So we want to buy things that are not already, you know, pumped like SUI is. And this is definitely one of my favorite AI tokens that I would recommend you checking out, of course, and do your own research. And then another project that I'm eyeing is definitely Sei. So Sei is a layer one platform. So like Ethereum, like Sui, like Solana, it's one of its own. It's one of a kind, meaning it's it's built on the Cosmos ecosystem, and you can basically do DeFi. It's where these platforms is where all the fun happens in DeFi, where people can build dexes that we just showed. People can build, you know, lending platforms. People can build like stuff like Beefy, for example, that are DeFi aggregators. So basically, Sei is something that I'm eyeing because, as you can see, it's really similar to the Sui chart before it actually took off. So I get interested when something is in this phase and not past in all-time high, you know, in price discovery, because as Jon said very wisely, you know, there's not a great risk reward if you're buying something close to the top. Of course, you know, like sometimes there's exceptions, like Solana last cycle. If you would have bought the $50 top, you know, it wasn't the top. The top was way higher. But in this case, we want to be in stuff before it actually takes off. So this is another project that I would recommend definitely taking a look, studying, and because it could be a great upcoming layer one project. Then nothing is certain in life, of course, but we can definitely see some good volume pushing for this blockchain if we go to DeFi Llama. And usually when there's good volume and TVL, there's basically the price follows. So if we search for Sei, so the project that I just showed, and the TVL is basically telling a story here. So it's growing, definitely has been growing. And if we match it with the price here, we will be able to see the correlation there is. So this is the price action. Of course, here was a bit inflated right off the bat when the TVL was low, but now actually the TVL is higher than, you know, it overlaps the price here, which is a good sign for the long term. It means that people are active, people are putting money on this layer one. They're doing DeFi on this layer one. So this definitely is another way to monitor what you what happens behind layer ones, essentially. So definitely to keep in mind. And then you can also add the volume. As you can see, the volume also in purple here, reddish color. You can see that it has the highest. It had the highest peak of volume here just recently, which is always good to see. So this, for me, these two projects are full disclosure. I'm invested in them. I'm not saying you should, but I'm saying that you definitely want to pay attention maybe to them and consider maybe allocating something, of course, at your own risks. But yeah, these are definitely two projects to keep in mind, which are not in price discovery. So as Jon said, XRP, you know, also Aero, for example, is at a riskier buy. If you check the chart, okay, it's basically all-time high, and it's definitely very, very bullish, actually, looking at this chart. But it is on the grand scheme of things, it is a riskier buy over here because it's already at all-time high. Of course, if this takes off and passes all-time high, there's what we call air here. So we can expect it to run really fast, just like Bitcoin did when it passed all-time high, just like typically what happens when something goes in price discovery. And the perfect example is Sui, which has been basically going up only since the beginning of this cycle. And as you can see, this initial part is basically very similar to the SAY graph that I was showing. So SAY right now is over here, and as you can see, usually we get rejected at the previous all-time high. It came down, and then once it actually finally burst through, it ripped really fast and it went upwards really fast. So we want to pay attention to the projects that have volume, that have people following them. There's stuff happening on them, especially for layer ones. And once we identify the project, we sure want to check the chart and see if it makes sense to buy in. Right now, SUI is probably the riskiest point to buy, and definitely I would let it cool down. The other day there was a good price entry here around 350, 330 with this altcoin cool down, and if you weren't a buyer here, you definitely won't be a buyer here. So that's definitely something that you want to do. Respect the pumps and let things grow, and learn how to respect the pumps, because usually some people just want to dive in when they see green, but actually we want to do the opposite. We want to dive in when everything is red. So that's definitely my two projects here.
I like it. I've always looked at SAY and SUI to one another, and I used to always say that like SAY is like SUI. So basically what Filippo just said, SUI is way too risky in my opinion. I agree too. I've been saying that. But just like anything, a lot of things are super risky, right? When they're new tokens and they're entering new price discovery, it's kind of a game of musical chairs. You don't know how high it's going to go until everybody stops buying. So if you're interested into something like SUI, I would say SAY, looking from the technical charts. I like looking at technicals is probably your best play, not financial advice. Aero, keep in mind it is a more of a riskier play, but it's a speculative play for Aero. The reason being is because Uniswap was actually the first DEX token last cycle. Aero is the first base DEX this cycle. So the first decentralized exchange on the base network. So a lot of people are comparing Aerodrome with Uniswap. So
Yeah.
huge speculative play. It's a brand new token. We don't know how high it's going to go. Same thing with SUI. SUI might go to $100. I don't know. Maybe $20. I don't know. It's going to surprise a lot of people. But when you're looking at these kind of tokens, it's a little bit hard if you don't have a lot of data. Unlike this right here that we're looking at, Radium, which is another DEX token, this at least has some data going back from last cycle, I believe. Ray got launched last cycle, right?
Yeah,
So
definitely. This
you could get an idea of where resistance are at, and you could kind of get a better understanding of where it might be struggling to break. That's kind of the reason why I like Sushi, because at least Sushi, as Filippo said, a lot of these tokens, one of them in particular being Sushi, you already hit its all-time like low. Like it can't go any lower. Like fundamentally, it can't go any lower. Like it already got demolished. If you look at the chart, it's already down. Sushi's already down 90%. 89, 90%. So relatively the risk is very low. Your risk is lower and your reward is higher. So there's a higher potential upside. But if you look at something like even now Bitcoin has now entered new price discovery. Even with Bitcoin, we don't know if it's going to go to 250, if it's going to go to 150, or if it's going to go to 300,000. No one knows. So altcoins, in my opinion, right now is your best bet, not financial advice. SAY, I think it's a really good play from a technical standpoint. Sushi, another one that I've been looking at is Degen. It's a layer 3 to base. Aero, but no, yeah, that's pretty much all I have to say. I do want to say appreciate all of you guys being here. Make sure to smash that like button for us on YouTube. Make sure to also subscribe, and give it up for Filippo too for joining us here today. Do you have anything else you have to go ahead and say before I do the outro? You're muted.
Sorry about that. Thank you. Thank you for pointing that out. So basically, to wrap it up, yes, the key things to take out of this is always counter the market psychologically and emotionally. So be thinking about selling when everybody's buying, and then respect the pumps. Like if something takes off, don't chase it. Like wait that it pulls back before getting a position or something, some positions in that project, or look for something that hasn't taken off yet. Because altcoins, I also believe that now is the time to find the altcoins, because Bitcoin has been in price discovery for a while now. It will definitely go higher, I think, but ETH, right? ETH is the best, is the father of altcoins, and I don't really consider ETH an altcoin, but look at the graph; it's not even at all-time high. So it would really make more sense to buy ETH rather than Bitcoin today. Like if you have to put some money today, because
I agree.
it could literally take off and go to 4,800 in one candle, and then get rejected. But look at this chart and you look at ETH, this one is basically literally you're buying the ultimate historical top, when in the past ETH actually was trading at higher than this. So definitely consider buying something that's not in price discovery. Actually, you want to scale down. Like if you don't have positions in Bitcoin, wait for pullbacks, but you're going to DCA way less in Bitcoin at this point in time, rather than ETH or Solana, as a matter of fact, because it's the same thing for Solana. It's literally almost all-time high Solana, but it's still not in price discovery. So we can definitely expect the same kind of chart pattern from Solana and ETH once they pass all-time high. So this nice green candles like this, because there's no previous resistances, there's no data, there's nothing. So usually when something passes all-time high, like Bitcoin did, it shoots up really fast. So to wrap it up, I think that's the final take. So don't buy in the FOMO, essentially.
100%. Last thing, I would definitely agree. I think Bitcoin, in my opinion, that rally's over. The rally was at $40,000, $20,000. Buying now, I mean, it could go to 300,000, but I think, in my opinion, from a risk to reward factor, Ethereum makes the most sense, because Ethereum is now following what Bitcoin has been doing these last couple months. So yeah, Ethereum is going to be it's going to be the next rally for Ethereum, and we will be seeing, in my opinion, over $6,000 approaching for Ethereum. So I think there's more money to be made in Ethereum right now than Bitcoin now. And it's a lower risk, in my opinion, because now we're seeing signs of Ethereum picking up. So if you haven't purchased any Bitcoin, I would say make that Ethereum probably your first purchase. It'd make a lot more sense, in my opinion. If you want to get to something less risky compared to the tokens that we talked about, they're a little bit more risky because they're lower cap tokens. Ethereum's already been out for years. So that one's like almost like your second Bitcoin, if you want to call it. I like comparing Ethereum to silver. But with that being said, I'm going to go ahead and end this very shortly. Really do appreciate you being here with us, Filippo. It was great having you. Appreciate you for everything as well, guys. Make sure to like, comment, and subscribe. And I do want to go ahead and say thank you all for tuning in today's episode. I want to go ahead and I hope that all of you are walking away with some clear strategies and insights into DeFi. And I'm definitely looking forward to seeing a lot of you next week as well. Make sure to go ahead and join our free community down below under the description. Become your own bank with decentralized masters. And also, you can consider checking out our private community. I highly, highly recommend all of you. As I mentioned, Filippo is a senior senior analyst here. I'm a mentor at Decentralized Masters. With that being said, guys, I hope all of you have a wonderful day and have a great weekend. And I'll see you guys very soon. Take care.
Hi, everyone.